Hey, everybody, what's going on? It is James here, and this morning I wanted to shoot a video doing a deep dive into both the broad stock market, but also into Bitcoin and what I believe is a regime change that we're actually in the midst of. So I'm going to start off with some stock market charts, and if you are tempted to skip these, I encourage you not to do that. What I'm about to show you is a look that very few people talk about. If we look at the stock market, this is the SPX measured against money supply. And so if I look at this, of course, this was the low back in 1982. If I draw that straight over, it didn't quite get there in 09. But if you're a trader and not just an investor, you already recognize the fact that markets actually like to range. Most of the time, trends are happening inside of larger ranges, some type of channel or some type of sideways consolidation. And so what's actually happening right now is we are testing our all-time highs versus liquidity. And those highs were made back during the dot-com bubble. So if I'm trading this, say, on a 5-minute chart and I saw this exact same pattern, I would be shorting up here with a stop above resistance. So my inclination is to think the same way on a larger time frame, as this is probably resistance and it's probably going to move down from here. What's even more interesting, though, when I look at this chart, if I start looking at time and not just price action, from the very low in 1982, the market moved up 70 quarters. This is a quarterly chart, 3-month candlesticks. So it moved up 70 quarters before it had a bubble pop, and of course, a horrific drawdown. If we measure from the low in 2009 to current period, we're 69 quarters from the low. By itself, that wouldn't be enough to really come to a conclusion. But when I look at that, and I also consider the fact that Shiller PE ratios are sitting at near all-time highs, which I've talked about in other videos. The only time it was higher was during the dot-com bubble. When I look at some very smart leaders in the finance industry talking about how they believe that the returns over the next 10 years are actually going to be negative, the forward returns, that comes into play. And then also I have to look at the idea that we're actually in a blow-off phase of a bubble. When I look at this particular chart, this is the QQQ versus US dollars. And to me, it looks like we're currently sitting in the thrill stage. So I kind of zoomed in here so it's easier to see. This looks like thrill to me, and it looks like we are just entering the euphoria stage. Now, this is not just a visual representation, it's backed up by other things. For example, that SPX chart I just showed you, but also there is a book called The 17.6 Year Stock Market Cycle. It's by a guy named Carey. I do not know how to pronounce his last name, but here, let me just show you the book cover real quick. It's this book here. And essentially the idea in this book is that the stock market has cycles that last about 17.6 years. And if I do the math on that, of course, think about the timing on this. Where are we at currently? Well, from the bottom in 2008, it's been 70 bars on the US dollar chart. 70 quarters is roughly 17 and a half years. So if this ends up being a 17.6 year cycle, we're literally right on the edge. And that timing lines up perfectly with the overvaluation of the market. It lines up perfectly with the fact that the SPX is testing the all-time highs of liquidity against liquidity. It lines up perfectly with what I'm about to cover in Bitcoin as well. So I had a multi-hour conversation with ChatGPT, and the reason that I did that is because I like to go into AI and actually ask it to play the counterpoints. I want it to basically argue against my ideas. I don't want a yes man or an echo chamber. I want it to say, this is why you might be wrong, or this is, something that you might want to consider, to try to check my biases. At the end of that multi-hour conversation, I asked GPT to kind of summarize everything and put it into a report. And what I'm going to do in this video is I'm going to cover some of the things that I talked about with AI, and I'm going to cover how I came to my conclusion. So I essentially showed AI a number of charts. I showed it charts like this, where I was showing, Bitcoin versus gold. And we discussed how Bitcoin is actually underperforming versus gold, and it has been for quite a while, and that this looks a lot like distribution. And that's what AI essentially called a hard asset. I showed it this chart here, Bitcoin versus QQQ, same thing. This looks like distribution. This looks like a UTAD that failed. It's now dropped roughly 54% off of those highs. So this further showed that Bitcoin is not acting like it should. It's supposed to be like a beta risk on asset. It typically outperforms the market by about 2 to 3x. And the same thing when it's going down, it tends to move down 2 to 3x. But in this case, it's not doing that. It's actually underperforming while the whole tech market is on fire. So I went further and I showed it charts like this, Bitcoin versus Coke. And we can see here that versus Coke, it failed to put in a new high in 2025 and is severely underperforming. Off those 2021 highs, it dropped 85%. I showed it charts like this, Bitcoin versus SMH. Again, we're seeing the same behavior. Bitcoin struggling to put in new highs versus all these other assets. So this is essentially like a risk on asset. SMH, it's a semiconductor, stock, and Bitcoin failed. It didn't outperform like it should in a high liquidity environment. I showed it this chart. This is a chart of the active Bitcoin addresses, and this is the 30-day simple moving average. We can see that this has actually been declining now for about 2.5 years. It's been declining. Now, by itself, there could be other explanations for this, but when you take this along with all the other evidence, it starts to paint a clear picture of distribution. And then finally, I showed it this chart here. Now, this chart, unlike the others, is not putting in an equal high or a lower high. It has made a higher high in each of these cycles. But what stands out on this specific chart is something else. In the first cycle, Bitcoin rose about 45,000% versus M2 or money supply. In the second cycle, it rose roughly 11,000 or just under 11,000%. And the third cycle that ended in 2021, it rose just under 1,400%. And finally, in the 2022 through 2025 run, it rose just under 700%. So this is a series of diminishing returns. And again, by itself, it doesn't say distribution. With the other evidence, it starts to point to distribution. What it says is at the very least, Bitcoin is maturing as an asset, and it's unlikely to have the same cycles over and over again, where everybody can predict, 12-month bear market, 3-year bull, 12-month bear, 3-year bull, so on and so forth. It's become too predictable, and the trade is too crowded. Too many people expect it to happen. Then we go into not just stock charts, not just on-chain metrics, but we talk about fundamentals. Michael Saylor is dumping enormous amounts of money into Bitcoin, and a lot of people are very excited about this, and they're pointing to this saying, look how bullish this is. But the thing is even with his massive buys, Bitcoin price is barely moving. Look at this. It's just grinding sideways, and that is a sign of supply absorbing demand. Demand is not overpowering supply. It's the exact opposite. Demand is just being completely absorbed by sellers. So from top to bottom, to kind of recap all that, again, we're talking about macro pictures. We're talking about relative strength. We're talking about liquidity. This whole idea is not that Bitcoin is going to die. This idea is that the 4-year cycle is no longer the thing. It's no longer the paradigm, if you will. So my thesis is that there is actually one macro bull market in Bitcoin. This is an idea that I first started floating about 4 or 5 years ago. that it was all one bull market with 70 and 80% corrections along the way. So the old playbook was, 70, 80% crash, new all-time high, and then rinse and repeat. I believe that we are transitioning into a new regime. I do not think this playbook is going to work in the future. It may be a case of it doesn't fall as far. Maybe we're seeing that right now. Maybe the bottom is actually in. I'm a bear, but maybe that's the new regime. But I just don't think this is the playbook, the 12-month, wait for 12 months, wait for 80%, and then magically all-time high. Again, key data, we talked about these numbers, how Bitcoin is, showing diminishing returns. So we all know, or we all should know, that Bitcoin is tied to liquidity, right? I say we should know, but if you don't feel bad. I didn't understand this back in 2020, which is why I misplayed, that year in the market. I was way too conservative. But essentially, in the past, it acted like call options, right? You would buy Bitcoin and it would outperform the market. So your downside was capped to whatever you were risking. And then if you were right, you can make a ton of money, just like call options. But each cycle has a smaller payoff, which we talked about in this video. When we look at this, again, Bitcoin versus gold, it already broke down. Bitcoin versus QQQ, it's failing to lead the pack. Bitcoin versus equities, lower highs, mean reversion behavior. Network activity is declining. And even large persistent buyers like Michael Saylor aren't meaningfully moving the price. Demand exists, it's being absorbed by supply. Again, the regime change is this. It's not Bitcoin dies and goes to zero. It's that it used to be explosive, life-changing, if you will, reflexive asset. And now it's, becoming a more mature, liquidity-dependent asset with weaker upside. The irony is this is actually the path, if it happens. This is one of the paths that I laid out many years ago that could see Bitcoin become a real store of value. Instead of being a risk-on asset, this is how it becomes something else. And I said all along, like, the people that were rooting for that, they shouldn't, because they were rooting for it because they thought it was going to make them rich. And what I said was, if it happens, the returns are going to be smaller. So again, the big risk that I see is that it seems like everyone, even bears for the most part, everyone thinks the same way. It'll drop 70, 80% and then make a new high. It's almost not even up for debate. Like, if you go into the crypto world and you put forth any thesis like I'm doing right now that doesn't follow this narrative, people either think you're stupid, or they think, you're trolling, or they think you're delusional. Like, no, almost no one will even consider that this isn't what's going to happen. Or if they will consider it, they will say, well, it's not going to drop this much, but they almost all agree this has to happen. It's always happened before, it has to happen again. That's the line, that you will see from, just from random people with 5 followers to people with 200, 300, 400,000 followers. They all follow this narrative. So that's where the problem is, because if this doesn't happen, that's when Bitcoin really gets in trouble. Fiat currency, it's really worth what people believe it's worth, and they believe it's worth its face value because the government says it is. Well, Bitcoin's worth what it is because people believe it's worth that. If people start to doubt the narrative, if they start to doubt that it's a guaranteed investment that's going to guaranteed go up in the future, well, then positioning starts to fall apart, confidence breaks, and the whole narrative comes undone, almost like a Ponzi collapsing. So to put it simply, I believe that we're in late distribution. I believe that the next cycle likely is going to have a weaker upside. I've talked about this in previous videos, how I don't think it'll breach 100,000 in the future. If it does, it's probably because there's a lot of liquidity in the market being pumped in, and it means that it may outperform, in absolute value versus like US dollars, but still be underperforming versus other assets. In other words, other assets may perform better and provide bigger returns. Could have possibly a lower high, again, that $100,000 I talked about. And there's a non-zero chance. I'm not saying that it's guaranteed. It's not, but there's a non-zero chance. That's how AI put it. I put it, at least a 10% chance that we get a deeper than expected reset, right? Possibly as low as like $10,000 if stocks actually do go into a true, 2001 type of bear market scenario. The biggest driver for me, is if the QQQ or really just the tech market, it doesn't have to be QQQ specifically. I showed you the chart that looks like late stage market mania where we're heading into the blow off phase. By the way, blow off phases often do double. So I'm not saying that I'm going to run out and short the market Monday. I'm just saying that I think we're in those later stages and that we're probably, mere months away from the top, but that top could be much higher. I'm not ready to step in front of that train yet. But if that happens, I think Bitcoin is going to perform very badly. I think it's going to drop with the market, but drop faster. And again, it will not act as a hedge, in my opinion. It never has in the past. So there's no reason to think it would be different this time. So, what I'm watching, thesis is confirmed if Bitcoin fails to outperform during the next risk on phase, which it actually is doing right now. It is not performing well. Bitcoin continues to lag gold and equities. Network activity doesn't recover. Liquidity expands and Bitcoin barely responds. And then so for example, if, interest rates drop and Bitcoin doesn't respond. Bottom line, you don't need Bitcoin to die for any of this to matter. You just need it to stop behaving the way that everyone expects it to behave. Because once that happens, the cycle breaks, the belief breaks, and, the house of cards starts to come undone. Again, not saying that sends it down to zero, saying that sends it into a deep reset. That deep reset, if you are long-term bullish and you're a very, very true believer of Bitcoin, you should truly root for that deep reset, because a deep reset really could take this down as low as like $10,000, retest the 2022 lows, possibly even in an extreme case, maybe even 2020 lows. I think that's less likely. But if I'm right, and this ends up being a macro cycle, so this is all one cycle, and if we get a true reset down to these levels, what happens in this whole thing is very simple. Markets go through accumulation, markup or expansion, distribution, markdown, and then they start the cycle over: accumulation, markup, so on and so forth. If this thing gets a deep reset, I still think it's potentially a possibility that it is maturing and that it does go back up, just not necessarily higher than this level here. And that's going to depend a lot on, the broader market and the context and things like that. $5,000, $10,000, $15,000 Bitcoin back up to $60, $80, $100,000. There's still fruit on that tree. So I'm not a perma bear in the sense that, Bitcoin is going to zero and it will never come back. I'm just using the data. Again, I showed you how the market's testing liquidity as a whole. I showed you the timing of these things, the 70 quarter thing, which, by the way, to be very frank about this, I've never seen anybody else talk about the 70 quarters. Even that book, that's not really about Bitcoin. It's about the broader markets. And that's not where I got the 70 quarter idea. That was just something I was looking at, and I'm a big time guy. I try to measure time. It's not that I found the 17.5-year theory and then went and tried to curve fit it to the chart. I found things in the chart and then started looking. And that's when AI was like, oh, there's actually a book written about this exact thing, 17-year cycles. And I'm like, oh, that's interesting. But overall, I just don't see what other people are seeing as a whole. And maybe that's just me. Maybe I'm just completely wrong. And that's why I'm the, being contrarian, because everyone else is like, you're an idiot. Maybe that is what's happening, but I don't think so. I feel pretty strongly about this. I really feel like we're months away. And I say months, it could be 3, it could be 6, it could be 12 months. I'm not saying like tomorrow, but I believe that, strongly believe that within the next year, the markets are going to come undone. And when that happens, I believe Bitcoin is going to suffer. And again, I think that's where that regime change is really going to hit home if it occurs, because everyone expects, even bears, 99% of them are like 2026 is the bear, 2027 will be a new bull market for Bitcoin. And so if we get into 2027 and we don't get a bull market in Bitcoin, again, the narrative collapses. And then we'll really see who believes in Bitcoin and who is just here to make a quick buck. So with all that being said, please remember that I have been wrong before. I can guarantee you I will be wrong again. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed the video, please give it a thumbs up. Consider subscribing to the channel. And as always, please make sure you're using proper risk management and trading safe.